Hello there. This is AI Investment Robot, your web investment instructor. I am going to talk about Taiwan's Semiconductor Manufacturing Company Limited today. The stock symbol is TSM. As matter of fact, the worldwide chip shortage makes this company very attractive. Please subscribe to my channel if you want to learn more about investments or asking questions. Please click that like button if you find this video is helpful. I really appreciate it. Last week, TSMC has disclosed its full quarterly financial results for Q1 2021. In those results, the company often explains where the revenue demand is for its technologies, and the financial split the demand brings. This number is not correlated to wafer production, given that smaller process nodes have a per-wafer premium, but it does indicate where the demand is in the market right now. As perhaps to be expected, 7 nanometers takes top billing. However, a couple of interesting numbers come out of the data. The headline numbers from TSMC's financial disclosures are that the company made $12.92 billion in net revenue in Q1 2021, up 1.9% from quarter to quarter and up 25% year-on-year. This translates to a 52.4% gross margin, which is down 1.6% quarter-on-quarter and up 0.6% year-to-year. TSMC shipped 3.36 million wafers this quarter, or about 1.12 million per month, 8% more per month than the 2020 average. This quarter TSMC has hit record wafer production, some 50% higher than its recent Q1 2019 low point. In Q1 2019, TSMC had low demand for high-end smartphones, low customer demand due to oversupply, inventory digestion, and Q1 is typically lower seasonally anyway. But as we can see from the historical 5-year graph, traditional production for TSMC has been around 2.5 to 2.7 meters wafers per quarter. It is only recently that TSMC is pushing out over 3 meters wafers per quarter, indicating a good shift in demand as we are seeing of late. This is buoyed by TSMC's newest Fab 18 facility, which went into 5 nanometers risk production in Q2 2019, and at full production is expected to manufacture 1 million to 1.2 million 12-inch wafers per year. This uptick in wafer shipments has had a net positive in net revenue as well. As for where the revenue comes from, for the second straight quarter, in Q1 2021 7 nanometers and 5 nanometers combined accounted for almost 50% of the company-wide revenue. 7 nanometers actually increased its revenue share, while 5 nanometers revenue reduced. 7 nanometers accounts for 35% of all revenue, with 5 nanometers now at 14%. This might seem odd, however, TSMC has very few customers with 5 nanometers designs, but plenty for 7 nanometers, suggesting that TSMC is able to have customers bid against each other. For the last few quarters, reports about TSMC's 7 nanometers lead time for products, from order to production to shipment, have been extending due to the increased demand. Recently TSMC has stated that it plans to spend $100 billion over the next 3 years to increase capacity, leading-edge capacity, which includes the $25 billion to $28 billion it had already planned for 2021, with $12 billion of that going onto a factory in Arizona. To put that in perspective, TSMC's Fab 15, which currently produces 12-inch wafers on 7 nanometers, cost $9.3 billion in 2010 and has the capacity for 100,000 wafer starts per month. Revenue from 16 nanometers is decreasing, now going below 15% for a couple of quarters, and showcasing that TSMC is making as much money from 16 nanometers as it is from 5 nanometers and 90 nanometers plus older process nodes. Also on this breakdown of process nodes, we can see that 20 nanometers has bit the bullet, and now rounds to 0% of TSMC's revenue. Both 20 nanometers and 10 nanometers are now listed at 0% as companies that produced hardware on these nodes are coming to the end of the replacement life cycles for those products. Demand for the older process nodes is still strong, with 28 nanometers and above as 37% of the company revenue, which combined is more than 7 nanometers revenue. Lots of fundamental electronics still require these process nodes, such as high-voltage components, high thermal support, long life cycle hardening, or radio frequency silicon that is mature and low cost. Even TSMC's interposer technology is manufactured on these process nodes, showcasing that the future is going to be a mix of old and new. At this moment, AI Robot thinks that TSMC is a sure winner for at least 1 year. So this stock will grow at least 20% with your eyes closed.